Behind me is a market cap of the world, a map of global market cap all the way since 1900. And from it, you can see how countries have changed their shares of the world market cap, how their fortunes have turned over time. So if you wind back all the way to 1900, the year 1900, the largest share of global market cap was the United Kingdom, which had the British Empire back then. So the UK went from 24% to just 3% currently. The big red area, of course, is the United States. And the United States currently occupies 64%, up from just 15% in 1900. And it has had its own ebbs and flows. Another country that's interesting in this map is Japan. So Japan had its boom in the 1970s and 1980s. And in 1989, Japan actually accounted for 40% of global market cap. So this area here is Japan, which suddenly explodes. And then, of course, its stock market explodes and Japan goes back to a much smaller share. So currently, Japan is 6%. Now, you might ask, where is India in all this? India is not visible because India is just 3% of global market cap. Essentially, we are a small cap in global terms. Now, you might ask, how does this relate to GDP? Do these shares reflect GDP shares? And the answer is kind of, but not quite. So sometimes a country's stock market can punch way above its GDP, and sometimes a country's stock market can punch way below its GDP. So let's take the US case for example. The US is about 27% of the world's GDP, but it is 64% of the world's stock market capitalization. Now, does this mean it's overvalued, or are there good reasons for this to be the case? US companies have revenues from all around the world, so they're not exactly tied only to the US economy. That is a question for debate. But yes, there is a measure, the Buffett indicator, which looks at market cap and compares it to GDP. And if the difference between the two is too much, that becomes a warning sign. India has a market cap that's a little above its GDP, and you can read that as you will. It's not the only measure, it's not the perfect measure, but it is a measure. The main lesson to take from this map and the ebb and flow of countries is that you should be invested in markets across the world. You should not be only invested in your own domestic stock market. That is a recipe for a great deal of risk.